So, gold and silver prices have pulled back after the recent election of Donald Trump, but don't be fooled. This could be the best buying opportunity smart investors and stackers will see for a long time. And a recent announcement from the Russian finance ministry indicates that nation states and central banks will be doing exactly that, buying the dip and accumulating more precious metals. And this is a sign that the pullback in the metals could be very short-lived. So, let's get to it. Did you know SD Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at sdbullion.com/sweepstakes. Hey everybody, Smart Silver Stacker here. Hope you're doing well. So historically, markets are always in a bit of a flux after major political events, and Trump's landslide victory is no different. Gold and silver have entered a corrective phase as investors recalibrate to this news. But while some may be worried about this pullback that we're witnessing in the precious metals, savvy investors, what we might call the smart money, are likely preparing to buy more. And this is where the international scene gets really interesting. According to this report in the Jerusalem Post, the Russian finance ministry has just announced that they are increasing their gold purchases. Now, you might recall that back in September, the Russian TASS news agency reported that Russia would be putting $1.9 billion worth of rubles to work purchasing foreign currencies and gold to bolster their reserves. And then more recently, there was the report that for the first time ever, the Russian state fund would begin purchasing silver for the first time in history. But now, according to this most recent report, starting yesterday, November 7th, Russia will be buying 4.2 billion rubles worth of foreign currency and gold every day. This is an increase of 35.5% from what they have already been doing. And clearly, Russia here is taking advantage of the dip that we are witnessing in the gold price to accumulate even more hard assets. But what about the other BRICS nations? Well, we've got an interesting update over in China. Officially, the PBOC has stated that they have not resumed gold purchases in October. But I mean, come on, do we really believe that? There's widespread speculation that China has been quietly accumulating gold behind the scenes. All the while, they have announced that their official reserves have stayed the same. But China is preparing for a future where the dollar loses some of its dominance. And I suspect that they will be looking at this dip in the gold price as an opportunity as well. In fact, a potential trade war under the new Trump administration is all the more reason for China to continue to purchase gold, whether they announce it or not. In fact, it is in their best interest to keep it hush-hush so that they keep gold prices low and they are able to accumulate more on the cheap. And this is a trend among all the BRICS nations. You know, recently India made headlines by repatriating 102 tons of their official gold reserves from London, a sign that they wish to hold gold not just as a financial asset, but also as an asset without the counterparty risk. That's why they're taking possession of their own physical gold. You know, they understand that it is, as we stackers have been saying for ages, if you don't hold it, you don't own it. And while dollar weaponization and sanctions could possibly be reduced under a Trump administration, the de-dollarization cat is already out of the bag, and it's not likely that gold demand is going to be tempered by a change of leadership in the U.S. Foreign nations have already seen what is possible if you get on the wrong side of the U.S. geopolitically with the freezing of Russian assets. And for that reason, they are going to want to continue to acquire sanction-proof assets like physical bullion, whether that be gold or silver. And speaking of non-dollar assets, did you know that in the US we actually have a non-dollar circulating currency? It's called the goldback, and it's actually made of physical gold. 1/1000th of a troy ounce of pure 24 karat gold per note. If you want to learn more about those, you can check them out at goldback.com. And you can even get free storage and earn interest on your goldbacks over at upma.org. There's a link down in the description for anyone who would like to learn more about this non-dollar hard currency. But let's bring this conversation back to the domestic situation in the US, and specifically what happened at yesterday's FOMC meeting and press conference. Now, predictably, the Federal Reserve cut rates once again by another 25 basis points, but that's not really the story there. I mean, they had to cut, despite the fact that U.S. Treasury yields are soaring. Inflation expectations with the new Trump administration are on the rise. Very likely they should have hiked rates rather than cut. But of course, politically, that was a totally non-viable move for the Fed. I mean, how would it look if they started raising rates as soon as Trump was elected? That would look highly politicized, so they really had no choice but to cut. But the rate cut, to me, wasn't the most interesting thing to occur at that press conference and that meeting. What was much more interesting was the question that was posed to Jerome Powell as to whether or not he would step down if asked to resign by Donald Trump, to which Jerome Powell responded with a very curt no. He went on to say that he didn't think there was any legal basis for a president to remove the chair of the Federal Reserve. Now, my layperson's understanding of the legalities of that is that it actually is possible for a president to remove the chairman of the Federal Reserve, but only if they have cause. And that phrase, with cause, is widely interpreted to mean there's some kind of significant malfeasance on the part of that Federal Reserve chair. The president can't simply remove them because he or she wants to. But the fact that this was even brought up is very interesting. It's very significant. Why? Because Trump has openly stated that he believes that the president should, quote, have a say in the Fed's interest rate decisions. And the floating of the idea that he may remove Jerome Powell as the chair and perhaps replace him with someone more to his liking suggests to me that we could be headed for an era of extremely low interest rates, engineered by a president who wants to keep borrowing cheap. Trump has made a lot of promises about tax cuts, after all, and I think that we're probably going to get those. You know, no taxes on tips, no taxes on veterans, no taxes on Social Security. And I think it's great that we're talking about tax cuts here. There's nothing wrong with that. But the thing is that it's very likely that the promises that we've gotten regarding cutting spending are not going to actually manifest themselves. I mean, it's hard to understand what spending exactly the Trump administration plans to cut. Certainly not defense spending, certainly not Medicare, certainly not Social Security. In fact, the cost of Social Security is going to actually increase by virtue of the fact that we may see the taxes on Social Security payments removed. Now, maybe Trump could reduce the cost of the interest on the national debt, but that, again, could only be accomplished by central bank intervention to buy up new issues of Treasury debt and drive interest rates down. And that, of course, would be massively bullish for the precious metals and very inflationary as well. But the bottom line here is that even if all discretionary spending were actually cut, we would still be in a debt and deficit nightmare with all of those other expenses. And even cuts to discretionary spending are likely to be stalled in Congress. Now, these policies of potentially cutting taxes and maintaining or even increasing spending in the short term, yeah, they might be very, quote unquote, stimulative for the economy, but they will almost certainly be very highly inflationary as well. And that, I believe, will be pushing gold and silver to new record all-time highs in the long run. And that move will be bolstered, of course, by international players like Russia and China and India, central banks and high net worth individuals piling into the hard assets because they actually understand what is ahead for us. And basically what all of this means is that while the mainstream may be selling some of their paper gold and silver positions during this corrective phase, the smart money is going to continue to accumulate. And from the perspective of just an average stacker, I mean, I like to think of buying gold and silver like buying insurance. You hope you never need this stuff, but when you do, you're glad you have it. And I suspect that over the course of the next 4 years, we're going to definitely need our gold and silver. But what about you? Are you buying this dip in the metals, or are you still waiting on the sidelines? Leave me a comment down below to let me know what you think. And if you're as fascinated by the global chess game of precious metals, gold and silver as I am, don't forget to like and subscribe for more updates. Thanks for watching, everybody. Stay safe and happy stacking. I will catch you next time. Smart Silver Stacker out.